Hey, welcome to the Advisor Lounge at the Winning at Life channel. I'm Nicholas Rohde. I'm one of the advisors with the team here at Gregor Ricks Associates. And I've got Brandon Blanchard, another advisor on the team with me as well. This is a new segment we're starting to do that we want to put out to the public just to give you a little bit more insights on our views, and just what's going on in the world, what's going on with the markets, and just planning updates and just certain cases and situations we might come across behind the scenes that you normally don't hear about that we want to bring out to engage with you. For future segments, we may actually take client or questions, any topics that you want to hear us cover. Any of that you can actually email over to info@gregorricks.com for any future Advisor Lounge sessions that we have. So today, Brandon and I are just going to talk about a few topics. Most recently, this post-election bump that we've had and some planning opportunities that we're looking for, just different types of risk we need to look at in retirement. And with the holidays approaching, a lot of people, especially with the recent economy, find themselves a little bit strapped for cash. We want to just talk about just some personal things that we've done in our life, as well as many experts and articles that recommend things you can do to just help you out financially if you are in a tight situation, especially around the holidays.
And definitely, everybody's feeling inflation. Everybody's feeling the increase in expenses that usually come around year end. So it's forefront in everybody's mind. So I think today we wanted to start out with talking about the market. Now, full disclosure, we're probably not going to talk too much detail about the market on this particular segment. Gregor's got that pretty well covered with his Monday market updates. But hey, that's the forefront on everybody's mind is that Trump bump that we've been seeing the last couple days, right? So let's talk about it. So since that immediate post-election bump, we've gotten some pretty good positivity. From the election through Monday, we saw about 5% increase from the S&P, which is definitely nothing to scoff at in that short of a time frame. Now, the market gives and the market takes. If last week was the give, now we're on the take cycle, today being no exception. So, of course, this is as of a couple minutes ago before we got into this live show. So as of today, the Dow is down about 0.8% and the S&P is off about 1.6%. So get into a little bit of why people expect that and what is the reason for that reverse of course, if you will. So a lot of that has to do with just the tiredness or the loss of euphoria almost, as Bloomberg put it this morning. So people are getting a little bit off that election high and coming to see, well, what is the future actually going to hold? A lot of that did have to do with Jay Powell's comments yesterday from the Federal Reserve. So they kind of put the damping on the expectation that there was going to be another rate cut through the end of the year. Most expectations going into that speech on Thursday were about an 80% likelihood of another cut. Now, this morning, we're looking at maybe 50-50.
Yeah, just flip of a coin there.
Exactly. You go from a sure thing to a coin flip. So that gives a lot of uncertainty, and we know one thing is that Wall Street doesn't like uncertainty. So that's going to be likely a bit of the norm that we see is the expectations of Wall Street versus what actually happens in the world and what kind of rubber banding we see from that. So expect a little bit of that volatility, but that's what we normally see through election season, a little bit of the norm. So more of that, we just need to keep that long-term focus and make sure that we're managing risk in the portfolio pretty well. And risk is always forefront of the concern of what we have to do when it comes to retirement planning. So, Nicholas, what do you think is kind of a base mentality on what kind of changes you need to make to your risk exposure, especially as you get into retirement or close to it?
Well, one of the things that I've always heard from clients and conversations we have in the advisor team is that you can't react fast enough. When things are good, this is the best time to be looking at how is your portfolio structured? Are you ready for when market issues do happen? Because I love, and I'm sure Trump has to love it too. The Trump bump, it just has a nice rhyme to it. But yeah, we saw it, 2017. We see it now. But even when things look like they're good, there's going to be issues out there. And I remember having conversations before the election with many of our clients, many people coming in to visit with us. And of course, like we always like to say, it's about 50-50 on the popular vote, right? And I would say both sides were worried if the other candidate won, there'd be major issues. And I remember having pretty frank conversations telling folks, like, it doesn't matter who wins. The market's going to have an issue at some point because it always does.
Absolutely.
There's always a reason. There's always something out there on the horizon. So part of that, just what you just said, just you need to balance the risk, or you should look at balancing risk or working with the team to just see how you're sitting today, how much risk are you carrying across the spectrum. And just like they say with real estate, location, 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 I love the whole diversification, diversification, diversification. Because if you go too heavy in one arena, you can really get burned if that one sector ends up taking a hit because of a policy change or some bad news cycle that happens.
And from my point of view, I think you kind of hit the nail on the head very beginning of that topic. You can't be reactionary because you never will be able to react fast enough. So a better plan is one that takes into account that those long-term focus, you know that there's losses baked into that pie. Gregory always says on the radio, about 3 out of every 10 years within the S&P are negative. So we know that's going to occur. The only thing we really don't know is when and how bad. So you should have your portfolio structured in a way that something is working in your favor at any given time. And again, focus on that long-term aspect. Diversity means that something is likely not working in your portfolio at any given time. But not everything works all the time. There are some ebbs and flows to the market, that give and take section that I mentioned earlier. So you want to have something that in the negative part where the stocks are losing, maybe the bonds are doing well, or maybe vice versa. So it's about that rotational aspect. And again, know that diversity means not everything is working all the time, but something is working all the time. And that is the overall goal.
And that's part of what we do with the Invest 50/50. Just structure the assets so you just have the best chance of something moving in your favor. So as we're just trying to increase that probability, increase those chances for us.
Very much.
Just to help when the good times are here and when those bad times inevitably come again, just to balance that out. And one point you made too about earlier when we started this topic about just thinking in retirement years, of course, people have some euphoria right now. Look at the markets. There's so much money in money markets right now. When the Fed does start moving rates down more and more again, that money's going to need to find some place to go. So the stock market likes it when they have the certainty that there are rate cuts happening, but you still don't want to be chasing that all the time. And just have the diversification, have something that moves in your favor and that you constantly have to look forward to just to balance that risk out.
Yeah, your portfolio success should not be based on your clarity of a crystal ball. You shouldn't be having to predict what the government's going to do and how Wall Street's going to react to it. So that gets a lot into the topic that I spend a lot of time on personally is the difference between risk tolerance and risk capacity. So that's really determining what kind of risk are you as an individual comfortable with and what kind of risk is your portfolio able to withstand. If there's a disconnect between those two, it can cause some pretty significant problems down the line. I've come across some individuals who are very aggressive and they're kind of stuck in that younger man's mentality where they think that they have the time to keep on working and recover from that risk and the loss associated with it. So they're okay with making those aggressive bets in Wall Street. But then I have to explain to them, look, you're kind of at the end of that salary train, if you will. So now that we're leaning on this portfolio for income, your portfolio capacity for risk has dropped dramatically. So now, even if you can mentally tolerate it, maybe one bad year, especially at the beginning of retirement, is all you need to start on that downward spiral where you're going back to work in a couple years, which is, of course, our main thing that we try to avoid.
Yeah, market drops while you're working and putting money in, taking advantage of that match in the 401k, making your contributions. You're buying in at lower values that keep recovering and coming up. You're absolutely right. When the gravy train stops and you ended your working career and now there's no more set income coming in, you start taking outflows in the portfolio, you get that sequence of return risk that increases there. And we've seen it, Brandon and I, we've looked at calculators before where you say, depending on what year you're starting with, you're taking just 4% distributions like a lot of people talk about. You get the wrong few years in a row in the beginning, it can devastate that whole portfolio for you.
Absolutely.
So that's where your capacity does need to shrink a little bit when you're getting in that situation in life.
So once you're getting to the tail end of your working years, you need to dial it back, play it a little bit more close to the vest. And sometimes that will mean that you're not keeping up with the Joneses when it comes to the return aspect because you're not taking all that risk. But long term is the focus there. You need to make sure that your portfolio is ideally going to outlast you. Nobody wants their funds to run dry before they're still needing it.
Absolutely. And that actually kind of brings us that last article that we found. Gregory posted this on our news blog. We actually got it from Finance Buzz. But the title was 8 Smart Things to Do When Broke. Just like you were just saying, you don't want to run out of money, but there's still people, all ages, all walks of life that they're paycheck to paycheck. They're going through, it's tough, inflation hit them hard, holidays coming up again, it's really hard with that. So in addition to the article we wanted to chat about today, I've got to give out some credit to my mother for teaching me this. So some personal things I want to ask Brandon what he's learned as well. But I remember growing up, my mom always said, hey, you've got your needs and your wants. So do you need it? Do you want it? And that kind of helped me just ingrain that in on how to try to start creating a budget and start, living within my paycheck and my means there. Another thing that my wife Mary and I do, which I love, and I've shared this with many clients, is that a lot of people, they find it's hard to save. It's hard, especially when holidays come up, graduations, weddings. It's really easy to bleed down that emergency fund. And then what about when the AC goes out in the middle of the summer? Or you've got a car issue in that emergency fund, if it's not there anymore, what do? You put it on credit card, you get more debt. So one thing that I've advised people to start doing, even if it's small, because it's the magic of compounding. It can start small and it seems like it might be a waste of time, even if it's $5 a week or $10 a month, or whatever someone can do. But just take money every month, and like we've all heard, pay yourself first. But what my wife and I have done is we've set up a separate savings account. So when we talk about if we are struggling with money right now, just for everybody out there, I think these are some good guidance to follow. We have an emergency fund that every single month I have a set amount going into that emergency fund, which is our do not break in case of emergency money. But then we also set up what we call the fun fund. So this is the Nicholas and Mary Fun Fund, that I've set a same amount of money that goes to the emergency fund every month into this fun fund, which is a separate savings account completely, that's just building up slowly in the background. And at any point, if either of us wants to do anything for us, for the kids, whatever it is, we can break into that fun fund for guilt-free spending. So if I want to buy, a new jacket, or we want to go take a trip, to Texas, or anything we want to do, we don't have to go into our emergency savings. We don't have to go into our day-by-day, everyday expense account. We just go to the fun fund and just guilt-free spend it. So that's something that we're looking at with this article from Finance Buzz about, things you can do if you are running out of money or if you feel broke. And that was just a personal thing that I had that I wanted to add before we share this article on something that we do that just gives you some extra money on the side so you don't feel just trapped by a budget and trapped by your finances. So we're all human beings. We all need some mental health. And if you want to go splurge on a nice dinner one day, as long as it's within your means and you're setting aside some money specifically to do that, I found it was really powerful for my family. I've been sharing that with a lot of clients. Is there anything you've been doing as far as in your personal life that you would think maybe would be a good just tactic or strategy?
I do something almost identical to you. So I like what you said there about the budgeting aspect, because I think that's one of the more difficult things when it comes to budgeting is that people don't build flexibility into it. Look, we're irresponsible at our heart. We're just humans, right? Now,
Yeah.
personally, most of my irresponsible spending comes in the form of travel. So I do something very similar to you. I do a separate account that is completely different company from where I do most of my banking, credit cards, investing at. So entirely out of sight, out of mind. And just like you would refer to, on the first of every week, I take a little bit out of my checking account and it goes into there. And only when I have that irresponsible purchase, that trip I want to take, do I take it out and act that, just like you said, as the guilt-free splurge fund. So build in the idea that you will want to make some of those maybe not quite financially advisable purchases or something that you're not quite comfortable doing. So you need to have that wiggle room in your own budget and your own financial future. Everybody needs that degree of enjoyment and mental health, just like you said. That's especially important, especially as we get close to the end of the year, to where Christmas budgets are adding up. Everybody, especially within our clientele, a lot of people have kids and grandkids that they need to provide for. So that can add up very quickly if you've got an extended family. So you feel that a little bit more heavily than I know. You got a couple young kids at home, so they're probably adding up already even before Thanksgiving. Am I right?
Oh yeah. So just with family, vacations, holiday parties, everything just kind of adds up. Donations you want to give end of the year. So there's a lot of things that just having some money on the side, even if someone's struggling financially, can be good for mental health. And that's something that Gregory's talked to us and the team about. We talked on the radio for Winning at Life. Is that if there's something you're wanting to do in life, we actually try to encourage our clients and help them to get it done. Because let's say you want to go, where was the last place you went hiking? Was it Utah?
Yeah, it was Utah.
So imagine you want to go hike out there. Do you want to do it when you're 40 or 50 or 60? I want to do it, in the late 30s or 40s when your body's better, you can have more energy out there. but within reason, right? So having some money set aside that even with, if you're struggling, this is conversations that we like to have with our clients and the public on just, can we give them some advice and guidance so we can all have a little more joy and peace, a little more happiness out there, still be budgeting and saving for the future, but also making sure we enjoy now responsibly too. So part of that with this article, they kind of mention, the 8 smart things to do when you're broke. First one, just stay calm. A lot of people look to respond quickly, and it seems like it's a panic, but we are also trying to get out the education that you're not stuck. There's things you can do immediately, just changing your mindset on things to move forward, to say, just take a breath, reach out for help if necessary, but look at other avenues on, okay, how can I get my head in the right position to look at the future and build and try to get out of this rut that I'm in. Another one is, of course, make a plan. We do a lot of budgeting with clients, and budgeting seems like a bad word because no one likes to budget, and it seems almost like an audit at times. And we do kind of recommend for clients, hey, just think of it like a one-time audit, that maybe just every couple years you re-audit yourself to see if your inflow and outflow has changed. But you're really not going to know where things are until you make that plan on what is your income, what is your outflow, and are there any expenses you can cut in there or you can adjust. And if maybe some of those expenses are the fun expenses, that's part of why in your plan you have that fund to build on the side. Some other ones, find some extra income, especially during the holidays. There's always maybe seasonal things, or the what are they called? The gig economy, doing things like Lyft or Uber, just different things you can do just to pick up extra income. One thing this article mentioned, which I kind of connected with, is I saw they mentioned that, well, what if you're in a tough situation, single parent, couple kids, you don't have time to pick up an extra shift. You don't have time to do that. There might be people that you can ask for help, that you're not asking them for money, you're not asking for assistance in that way, but you're asking, hey, can you maybe watch my kids for this night so I can pick up this extra shift? Just thinking outside the box on things, to be able to save money for the now, for the future, for retirement, and just cut away some of the extra expenses until we get back on our feet.
And I think that's important to keep in mind as well. Maybe you're on the receiving end on one of those requests. So if somebody's coming to you and asking, hey, maybe can you watch the kids tonight, tomorrow, they may not be trying to just have a personal night off. They may need that time to either work on their finances, work on their personal situation. So be a little bit more empathetic and understanding. Now, you talked about people don't like to audit, people don't like to budget. Look, we're finance nerds. We like to deal with numbers. That's what we enjoy, right? So I do fully support the idea of taking a periodic audit or budget inventory of your expenses. Get an idea on what your inflows and outflows are, because that helps you understand what the future does look like. I can't tell you how many times I ask on one of our introductory visits with new clients coming in, how much do you spend in a given month? Most of the time they don't know. So very often they go back, that's their homework I give them between the first and the second visit, and they come back shocked at what they find. So it doesn't hurt, and very often it will help. If you stay on top of your finances and know where is everything coming from, where's it going to?
Yeah, you don't know what you don't know. And I'll tell you, the first time I did this, and we have some fantastic software and things we use for clients and our budgeting worksheets and everything so that we have as a resource. But I remember the first time I took that, just pen to paper, said, okay, let's just list all, just like my mom taught me, my needs and my wants, right? So I list all my fixed expenses on, hey, this money has to go out every month. And then list, okay, well, these are my wants. So, if I had a streaming subscription or any kind of services, add those on. So the wants on here. And when you actually put it down the first time, I see why it's intimidating, and I see why it's scary and why people don't like to do this, because it is eye-opening when you see that number and you add it up at the bottom. But that really helps you, because just like we said earlier, you have to have a plan, because you can't go through this without knowing where is your cash flow, where are your expenses, is there anything hidden in there that you don't know about. Just get that audit done, and you don't have to do it every month. Just every maybe couple years or so, every year around the holidays, look, hey, what is my budget like? Am I spending more this year? Am I spending less? Why is that? It just helps you get in that mind frame of looking at the future. If you get your income and expenses laid out, that can also lay into your future retirement too. Like, make sure you're making your max contributions you can to your retirement accounts. Roth IRAs, 401ks, just doing things to solidify for the future as well. And that's what we do every day, helping clients with not just the money management part of it, but also just life help and guidance on their whole financial picture.
Very much. I think that's kind of a step one in forming a plan, really. Maybe you are one of those people in a situation where inflation and budgetary concerns have kind of gotten pretty tight to where you don't really have a lot of wiggle room month to month. In that case, starting that budget audit, getting an idea of where does your money come from and go to, that could be the thing that enables you to start saving up one day. Even if you can't do that right now, get on that path of being able to contribute some money both into your emergency savings and then ideally into your long-term investment plan.
Yeah, one question we also asked with the expenses is, well, how much do you have in emergency money? Because that's a big key right there, and we're always going to ask that every visit. Because if we see someone, 6 months later, a year later, whenever they come in for a strategy visit, we're going to look at what they have in that emergency savings, and if it's lower, what happened? Do we need to help get that built back up? Was a big emergency that happened, a big expense? If it's higher, fantastic. I mean, we want to see it go in the right direction
Right.
to where we can see, well, are we happy with our reserve amount? If there's lazy money above that, then maybe that can go to work. But if there's not enough, we need to work on getting that emergency fund built up.
And the term lazy money is a good point to hit on as well, because be clear, these rates being as high as they are right now, you can get a good return in
Yeah.
your checking saving. I've seen even money market accounts being in excess of 4.5% even
Yeah.
these days. But by and large, the emergency money, the job of that money is not to really work very hard for you. It's not to get a return. It is to be there when you need it, because you will need it at some point. That is just how life works. There's some unexpected expense coming down the pipeline. It's just a matter of when and how hard is it going to hit you, right?
Yeah, because there's always going to be a season. Right now, we're in a great interest rate season, but it's not going to last forever, like you said. And just another opportunity that we've been talking with a lot of clients this year about. We've had a lot of market euphoria. The markets have been positive. If you're fully invested and an opportunity comes up, there's no dry powder on the side. There's
Yep.
no money to invest in. And that's where, these 10% market corrections, that they happen all the time. Almost every year when you look through the data, you get the 20, 30% falls out there as well. They're just a little bit less often. But if you get one of those falls that happens, I want to have some dry powder on the side to invest, to push into that market to really get the long-term growth. But if you don't have an emergency savings and you don't have dry powder on the side, you can't take advantage of those opportunities as they show up.
Yeah, you do need to be ready to act on those kind of scary situations. Wait until that violence already occurred and then jump in. What's that old Warren Buffett adage? Buy when there's blood in the streets. So
It's something pretty brutal
he
like
always
that, yes.
advocates for trying to take advantage of those
Yeah, when the
seemingly
sharks
scary
when the blood in the
opportunities.
water, the sharks come.
Yeah,
Something like, yeah.
because that's where the opportunity presents itself, is when things seem the most scary. When it seems like the bottom just fell out and you don't really know if there's any more room to go down, that is likely
Yeah.
when you should be getting in. Buy on sale is another term I've heard pretty frequently.
Yeah, sometimes the scariest time to get in is the best time to get in.
Absolutely.
So excellent. So we hope this is helpful just for our first session of the Advisor Lounge with Winning at Life. I want to make sure everybody knows to tune in. So every Saturday, Gregory's live on iHeartRadio, starting at 10 a.m. Central Time. I believe tomorrow we've got Dwayne Stein as a guest on the radio show. You'll hear the advisors calling in from time to time as well. But we definitely encourage you that if there's any questions you have, any topics you want us to cover, this is the more laid back, relaxing lounge that we just want to have conversations with you about. Send those questions or topics in to info@gregoryricks.com. And thank you for joining us. So just have a blessed night and weekends, and we'll see you next week, 2:30 p.m. Central on Friday for the Advisor Lounge Winning a Life.
Thank you, everybody.